Hello and welcome to today's stock and crypto TA live stream with me, No FOMO Charts. Today is May 9th, 2022. It's about 7:45 p.m. at night on a Monday here, and we're going to go over some stock and crypto today. And we're going to take a look at also some stock sector indexes as well and some global indexes as well, because the pullback that's happening this month, or the crash really, the downtrend, is affecting global markets. So let's start with the USA. We'll start with the DIA, the Dow Jones Industrial Average Index ETF. And so we're on a daily chart right now, and the recent price action is we are in a confirmed downtrend. It was actually confirmed downtrend back in March. So there's a lot going on in the world right now. We have COVID-19, we have Russia-Ukraine war. We're still at the kind of the tail end of stock market earnings season. Probably half of the major companies have already reported, but there's still retail companies that probably report as well. This week is kind of a mixed bag of companies reporting, and we'll talk about those in about 30 minutes. But the downtrend was confirmed probably right here in March and April. And again, we have not had some serious downtrend and capitulation. Also, we have the Federal Reserve increasing the interest rate by 50 basis points, and there's probably going to be two more of those increases this year, the FOMC chairman said. So that's more bearish reason why we would pull back down in the market. Also, bears have been waiting for this opportunity for 2 years straight. So it's not a question of if it's going to happen. The question is how far and when is it going to happen, right? Because if we went from uptrend, this is very fundamental based as well. We went from the COVID-19 high to the low, previous low, uptrended and then consolidated for 1 year. This is the warning signal, right? I have not been that active in crypto once we hit this, in stocks as well, as we hit this sideways consolidation. It's not good. Then when we start downtrending, that's not good either, because that's the definition of a downtrend. So bears are going to try to attack that. Now the question is, how far down are we going to go? The capitulation has not happened yet in terms of this style of capitulation. A real crash has not really happened yet. So if it is going to happen, and the time depends on the market, how fast or how long that's going to take. But we're looking at a long-term picture right now. And so the levels of support to the downside, we're just touching it right now. 322, Fibonacci is 295, 272. There's actually the previous all-time high, which is 283, probably in the middle there. 618 right here at 248. If it goes extremely deep, 217, 196, or 176, it's not impossible. It's not impossible, but these are all levels that are support on the way down. Also, does this kind of look like a double top? It's not a perfect head and shoulders, but no, it's more of a double top right here, right? This could be interpreted in two ways, because if somebody's a perma bull, they would say, wait a second, isn't this the double bottom right here? It's possible. That's why I'm watching the support level very carefully right now. Is it the double bottom? Are we going to bounce back up? Possible. But at the same time as well, is it downtrending? Yes. So if we just lose that support, then we could have one more reflexive bounce up, still a lower high, and then pull back down to a lower low. So this trend line above, still holding. That's what I'm saying. The steep capitulation downtrend has not happened yet. Still, it's downtrending, but it's almost gentle, like. And the FOMC is probably largely responsible for that. Earnings was not that bad either. But we do have the official down cross, the 50 EMA below the 200 EMA. That's not a really great sign. And then if somebody's oversold trader on RSI, we're not at extremely low oversold levels yet on the daily for the Dow Jones. We lost the support bounces. It's not happening anymore like it was on EMA bounces 1 year ago. If you look at a weekly, we can see also, like I was saying last time, the potential head and shoulders. It's going to happen, 6% to downside minimum. 6% would be just a little bit below where we are right now, 320. If it goes 12% to downside, 298. These are all around the Fibonacci ranges. Makes sense to me. Also, if we're going to have a serious market crash, the RSI on the weekly is not really, it doesn't really touch it that often if you study the chart. COVID-19, March 2020, that was the first time actually for a while in many years. But if we go back to the daily chart here, it's not even that low, the RSI. Right now, what is it? It's 35. So it is more on the bullish side, but can't just trade off of that only, right? There's a lot of factors going on right now. So if it's going to keep downtrending, it would be interesting to note on the charts that if this death cross on the EMA is actually real this time, then it could be the start of the bear market, not the end. Just keep that in mind. All right, so I'm not going to talk about day trading or even swing trading right now because I'm talking more about long-term investing to get perspective, which should help all time frame traders. But again, on 4 hour, on 1 hour, we could bounce. Yes, definitely possible. On 5 minute 15, we could bounce. But for me, I find it prudent. It helps to get this daily long-term perspective. Okay, S&P 500. Look at the day chart here. We take a 2-year perspective. You can just see it, what's happening on this chart, the visual. We were uptrending. That was basically the stock market was propped up by the FOMC and traders. The bull market went sideways, and now we're in the downtrend. On this, if we look at it almost like a weekly time frame, then we're looking at our lower low right now. Seeking that out on the weekly, right? So we had the shooting star and this evening star pattern, and then we're pulling back down. Also head and shoulders, bearish on the weekly, as I was saying last time. This could be large if it is 10% to downside. 10% would be about 385. If it's 20%, 2 times the target to downside, be about 341. We can verify that with Fibonacci on the weekly. I'll use the close. It's close. It's close enough, right? I might have, if I pull this down, probably see if that changes it. I like the close better. Makes more sense to me. It's closer, close enough with a couple percent targets. So on this weekly, we are seeking out the lower low, and eventually it could have that tradable bottom, and then we'll bounce up to make the next lower high if it's going to be textbook downtrend, right? If it's going to go like this. So that's something to think about for myself as well is, well, okay, if there's going to be a bounce at some point, as a swing trader, I want to try to catch that if I'm a bull, but that's extremely dangerous because some on Wall Street might consider this the beginning of this falling knife. It depends on someone's strategy and perspective. So we have the support on the chart, and we'll draw some trend lines as well, and they are angling down. On this particular support level, it might be right at touching it at the bottom there. So on the yellow trend line, would be interesting. See if we get that bounce at some point. But again, death cross on the S&P 500, that has not happened since the pandemic started in March 16, 2020 on the chart. So now it's May 5th, 2022, and on this particular death cross. So again, I'm sure bulls and day traders and swing traders, they're going to try to play every single bounce here. But for me, when it's just straight red, I tend not to play V-shaped recoveries unless you're a day trader. I'm a day trader. I would like to see a better level of actual support before entering, because it's just like that. It's a day trading play. It's not really, it could be a swing trading play depending on somebody's strategy. But again, we are not extremely oversold on weekly and daily time frames. We are touching the 100 EMA right now. We just lost that today. But futures are up. If you're watching the news, the futures are up in the Asia session that's starting. It would be interesting, though, to see what happens in the European session overflowing into the USA session tomorrow. But I would not be surprised. Sometimes what happens is on some of these short-term time frames, we get the bounce overnight, and then USA wakes up, and then we short, right? So just because I see futures are up on the news does not mean the bear market is over. It's just that people are playing the day trading bounce or the swing trading bounce. So I'm not really going to go into day trading setups today because I want to keep a big perspective for people. NASDAQ. All right, the big story that's going around right now. And also here in the USA, we just had a kind of a family holiday this weekend. So to me, it makes a little bit of sense why people might have been gathering and talking about, hey, have you heard or have you seen what's happening in the stock market? People sometimes talk. It's just like social. People might be talking about, oh, I sold some, or I'm going to do this, or I'm going to do that, right? People just gather, families, friends, they talk. So sometimes that happens, like post-holiday, there's some kind of reaction to the upside or downside, and today it was downside. All right, so QQQ. Start off with this weekly head and shoulders right here. Textbook. The neckline a little bit debatable, but textbook head and shoulders, and we can see if we measure this, 12% to downside. Okay, we went well below that target. The first target was 315. The second target doubled that target, 272. And because of what's happening right now, let's make a triple the target, which would be the previous all-time high. Very interesting that all these targets are lining up. Very, very fascinating on the chart. So this is the previous pandemic high right here before the pandemic started, 233. Interesting on the weekly. So a similar thinking applies is, okay, at some point here, wherever it's going to be, the lower low might bottom out for a tradable bottom and then have a little relief bounce, a little short-term short squeeze. Maybe if some fundamental news changes in the next 1 or 2 weeks, might get that bounce up. But again, the trend line, everything is trending down right now. It's favoring the bulls, and we also lost the support. The week's not over yet. It's just the start of the week. But let's get that Fibonacci up just to get the visual of support. Okay, looks like it wants to attempt to try to fall and touch maybe this 50%, retrace support 285. Then we have this support cluster to the left side, which is that gray target, which is 271, and then the 618, 255. If it happens to get that low, if it's extremely volatile pullback and crash down, it'll probably pull back, bounce up for the day traders, maybe retest this diagonal resistance now, and then pull back to the downside as well, right? I know some people are thinking, okay, it depends on the time frame. If it's day trading, then there could be little bounces every single day. Swing trading, though, this is not really a good. This is nothing. This is not that support setup, really, right? If you're looking at a daily for swing trading, this is nothing yet. So that's why I'm just not touching it as a bull. I'm trading stock short when it has downward momentum right now because it's bearish. That's the trend. It's down. Shorts and put options. The problem is where's the bottom going to be? And how far is it going to go down? All right, so before we move on, just double check. Okay, the 1 hour is a little bit oversold. The 4 hours getting into that oversold range. It is down death cross on the 1 hour, on the 4 hour as well. But I like to see some additional support form before I enter as a bull, as a day trader. But again, futures overnight looks like they have a chance to try to bounce up and then maybe watch out for that pullback as a day trader. All right, let's get into, actually, I usually don't talk about this, but let's talk about the VIX once because it's on the news right now. So if we just look at the VIX, which is the volatility S&P 500 index based upon S&P 500 options, okay? So it's very It's considered the fear index by CNBC and Bloomberg a lot. So if you watch CNBC, they're always talking about the VIX on a daily basis, probably on a weekly basis at least. So again, what's the VIX? We haven't seen extreme fear capitulation here in terms of this was our pandemic, right? So when the VIX fear goes out of control, it shoots up. So we haven't had that yet. We haven't had the capitulation market crash. That's just one thing I want to point out to people. However, the VIX is uptrending. That's just one thing I want to note to people. The VIX is uptrending. And if we get this, what I call the VIX fear to shoot up, that would mean the market will pull back down significantly. Also, we want to take a look at DXY, the US dollar currency index. And again, this has been, it was really interesting when we saw it back here in June 2021, just like a case study of finding the support level, the double bottom. And I remember talking to a fellow trader about, okay, this thing is uptrending. We might have the short-term pullback to this support line, which used to be our ceiling, but it's going uptrending almost out of control, which would mean probably that our indexes are falling, right? So this was kind of foreseeable. If somebody is really, really objective and studying a lot of assets and charts and finding correlations that, wait a second, this thing's uptrending starting from last year, June, July, October, there were warning signs. It's not random in the market. Okay, so let's do some commodities as well. So let's look at oil for a second, because oil, very interesting chart. USO ETF, oil ETF. It has been uptrending, but we have some, it's hesitating right now. It's finding equilibrium, this little triangle up here at the top of the price. So this is kind of a very played out stock by now, meaning that it's kind of over, could be in the overbought range on certain time frame. More on the weekly side. But actually on these intraday, it was actually kind of low. 15-minute, 1 hour is very interesting to see. On the 4 hour, 1 hour, not 4 hour, not so much, but the 1 hour, 15-minute actually kind of low RSI. But this kind of topping out formation is what I'm saying. If we're not talking about indicators, it's just, well, USO used to be $17 and now it's $76. That's what I'm saying. It's kind of, the price is kind of on the high side. Just getting stuck under that resistance of $82. So if this happens to pull back for whatever reason, fundamentally or technical wise, it could pull back down to this upper $70 range or the $67 range. That's what I'm saying. Is you have the uptrend here. If this is not going to break through to another higher high and it's getting stuck there, then a lower low or higher low could be in order, $70 range. And right there at $69 could be an interesting support level. If it's really, really bad, falls back to 59. But the opposite is true. If there continues to be supply chain problems, then we could see the retest of 86. And then if we could break 90 and try to get to 100, that'd be interesting. Just watch out for that on US oil. Next one, UNG. UNG is what I'm talking about in terms of that overbought. I was looking at that yesterday. So what was the clue here on UNG is that if we zoom out a little bit, it's in a weekly uptrend. It was. It still is. We had the support down here. It had this large higher high off the Warren Buffett investment last year. The pullback down to about probably 6.8 or 50%. Let me just check that. Into the 618 zone. And then a continuation because of the Russia-Ukraine war and supply chain problem. That's higher highs and higher lows. So, but the problem is there is bearish divergence. There is bearish momentum for the short term right now in terms of this is getting a little too overextended. It's everybody's trying to play this. Whoever's trying to get in, the UNG ETF is so accessible, right? It's starting to go parabolic. When things go parabolic, it's kind of dangerous. We just hit that parabola support right now. But resistances at 30.26 and 27.20 is the problem. And again, on the daily, there's that bearish divergence. On the 4-hour, it was there several business days ago, March 5th. So watch out for this one. I mean, the energy sector is kind of overplayed right now. This particular asset's a little bit on the overbought side, but the supply chain problems is not over. It's hitting that parabola support. So I'm curious if it would be interesting to see if this is back in neutral zone on the daily, if our 15-minute, 1-hour traders, day traders are actually going to buy this back up for the lower high here for UNG. It's high, but there's an interesting, that could be an interesting trade. Dangerous, but it's there. Interesting. Okay, let's move on. Let's just look at gold for a second, for a few minutes. Interesting to see that gold, spot gold here, has actually pulled back with the market, not really playing its safe haven role at this point, but there's a lot more going on in the market. So interesting to see here, again, on the weekly, this double top range in the zone, the resistance. Actually, there's another resistance here at 1889. So we hit the $2,000 gold resistance and pulling back ever so slightly. It's a little tricky, right? It would have been easier if this was some kind of clear, is it going to be a double top, like a monthly double top? That could be one scenario to think about. That would be not good for gold. If it's a double top on a monthly, then the downside target's 1700. But it could take months to get down there, right? Sometimes that happens with gold. If we look back at 2013, 2012, exact same, almost the exact same chart pattern happened. Very interesting on the charts. It looks almost the same. So the resistance is 1950. That's the big overhead resistance. If let me zoom in a little bit. Monthly chart's a little bit too long time frame. So the immediate support is probably 1821 right here for gold. It was chopping around here in this triangle. It was chopping around in this triangle. But who knows? We could get a continuation breakout, right? If this 1817 holds. So I'm just explaining different scenarios. Is the bearish scenario is if this starts downtrending, then we're going down to 1700. But if it's bullish, it'll hold the support at 1850 and try to bounce back up probably to the 1900 or 2000. So very interesting to watch. Very we did have a double top. That is bearish short term. It's not over yet. What would make this over, quote unquote, is if this starts downtrending and then you have a confirmed downtrend, then somebody could say this bullish move is over on the left side. Let's look at silver. Silver. Okay, I'm just going to erase this idea. It's in my profile if somebody wants to look at that. But silver in the short-term downtrend, low. We have the lower low, lower high, lower low, lower high, and try to seek out the lower low. So somebody could also say, well, isn't it in this downward sloping channel? Yes, it is. Somebody could also say, wait, isn't this a consolidation? What if it goes up? It very well could go up. But also, if we lose support, then it's obviously pulling back down. So that's why. It's very interesting to see on these charts. Depends on somebody's perspective, but the larger global momentum and trend right now is down because of the fundamentals. It's not just about charts. So the support level that is held for a while is this $21 range. If we lose $21, then silver's probably in trouble. To downside. If it needs to hold to bounce up to where? $23.65 or $26 would be nice. But the 50% retrace is right under here, 28.30 and 18.51. There's not much support on the way down. So watch out for that. We did make this seek out the lower low. So again, it seems like a lot of assets, short-term day trading would eventually bounce just for the day trading setups. But swing trading, again, it's just one leg down here, for example, and this applies to a lot of stocks right now. It's just one leg down. So somebody could get the day trading bounce, but the swing traders, we're looking for more strong support level before somebody's going to enter that, right? Hopefully that makes sense to somebody. I'll circle it to really highlight the point. It's that one leg down. So day traders can play down their 5-minute or 15-minute charts. Okay, let's look at a little bit of tech and we'll move on. Somebody asked me in my Discord about Twitter, so I'll talk about Twitter as well. Probably have to look at Tesla as well. Let's do some of the majors right now. We'll look at Apple. Apple as well. I'm not going to do this for every stock, but because Apple's the largest USA stock, we were uptrending in Apple, and then it started to consolidate for past 6 to 8 months. Apple has not, quote unquote, crashed. There's no death cross on Apple yet. Okay, Apple has not death crossed since 2018, 4 years ago. So that could be one metric. Once we lose Apple, then we know we're really in trouble in the stock market, because then something is seriously wrong. But for now, it is still downtrending. Right, this is our lower low. We have our trend line here, trying to survive in the wedge. But still, this to me on a weekly looks like some kind of double top resistance psychologically for now. Right? It's not a continuation bottom like that. It's not a upstairs pattern. It's just sideways, slightly downward angled. But let's get some of these big support levels up. So now that we have this support resistance and trend, there's less fear in the market. We don't have to be afraid. If this thing pulls back down, it's fine. 147. It's all charts. If it pulls back down even more, 140. We'll get a 130 in there, or 126. You could all see it right at the support, 116. $100 would be great. If it goes down to 92 in terms of discounted bargain, if we're talking about value, $92 Apple stock, I would be interested in that, or even lower. I mean, this is post the split, obviously, the stock split. That's going to happen again eventually, but $90, I mean $60, $50 Apple, come on, that's really good bargain, right? Okay, let's take a look at Amazon. Let's move on to Amazon. Before I forget, let me actually draw some resistance. So resistance to the top. If we get the bounce, because it's right at the support trend line right here. If it bounces up 156, 160, 162, etc., 165 for our day traders. Right? But again, if we're looking at like a day chart or 4 hour, not extremely oversold until you get to day trading time frames, like a 1 hour. So it will be interesting that tomorrow morning we could see a little bounce up. It's right at the support level. Very interesting. Amazon had bad earnings, and right now these e-commerce names are getting shorted. We're talking about Amazon, Shopify, eBay, Etsy, Wayfair a little bit. But this is an interesting case study. And I keep saying interesting because what I'm saying is there's a lot of people right now that are actually really, some of them are bullish in this market, but the charts are telling me it's downtrending right now, right? So it depends on the time frame. If somebody's a day trader, okay, or swing trader, okay, they're trying to catch the bottom, but the Wall Street's saying, never try to catch a falling knife. This is what it looks like on the charts. Something like this. When it's just pointing down sharp, somebody could use their technical analysis skills and say, wait a second, isn't this a 5-wave Elliott wave pattern? So shouldn't it end soon? It could end. We could be staring at some support level. It depends on somebody's strategy and tools again. It's always good to be open-minded though, because if I'm 100% bearish, as a day trader, I'm going to miss all the bounces. As a swing trader, I'll miss all the bounces. So I am bearish 80 to 90% because it is downtrending, but I do understand the market that we do get some tiny relief bounces. So the thing with Amazon, though, why I'm concerned is we lost the 618, and now it's pulling back down to the 786, Fibonacci 2109. Also, we could see 1906 in there, or the actual pandemic low, 1662, which would be phenomenal value, right? So it depends on somebody's perspective, and we're not talking about morality or ethics here. We're just talking about pure investing, business, and finance. Is Amazon currently is approximately negative 42% down from the highest high, which was November 2021. So if we have an extreme market crash, which is possible. Okay, so we'll just talk about worst case scenario. I mean, if we have worst case scenario possible, and this is the real big recession everyone's afraid of, Amazon goes 80-90% off just because of some catastrophic black swan event, then sub $1,000 or even $1,000 Amazon, I'll probably buy some of that. That's really good value because relative price, right? If Amazon was 3,000 and then 1 year later or 2 years later it's 1,000 and it's almost the same company, that is what Warren Buffett teaches. That's value in the market. Interesting. That's what I'm saying. With all these charts, how low is it going to go? This particular upside down head and shoulders I was looking at didn't work because the support level got broken to the downside, so that doesn't matter anymore. We're talking about where's this tradable bottom bounce going to be. We have to kind of zoom in to see it. We had the death cross on the daily on Amazon all the way back at the start of this year was the warning sign that maybe this is going to be a downtrend. Right here, death cross on January 25. 4 hour still death cross, but Amazon is pretty low. RSI, the 1 hour is pretty low, the 15 minutes low, but RSI could always go lower. That's why I'm looking for a real reversal pattern. Day traders are probably going to try to play this bounce on the 5 and 15. On the 15 at least, it looks like somebody's gearing up to play this bounce possible. The 1 hour, there is definitely bullish momentum here. However, when we zoom out to swing trading time frames, like a 4 hour daily, there's not enough support level for that. On the weekly, there's definitely not enough, but it is in the 25 RSI level and this bullish MACD. Excuse me, it's not ready yet, but it looks like maybe 3 or 6 months from now, it would try to flip around. We did lose the 200 EMA on Amazon. That's why the lower high, where is it and when is it going to happen? That's the swing trading opportunity. Okay, let's go Tesla. We'll do Twitter. These are both Elon Musk companies now. So, Tesla on the weekly. Tesla, we already have this resistance overhead at about 1100 to 1250. That was the all-time high of Tesla. But the fact that it's tested it, how many times? 6 times and failed means it's a real resistance. It's a serious resistance on that top side. Again, if we just turn off all the indicators and just look at the price, it went from an uptrend to a sideways consolidation. This is that last leg up. There's bearish divergence. It's bad for the market. Elon Musk sells or starts to sell, and it's downtrending right now. Right at the support, it just lost that today. So now we zoom in a little bit here. And again, I always want to caution people is when we get this type of formation, if anyone's ever studied Wyckoff theory, again, there's the accumulation phase. People are buying, the markup where people are really buying and the price goes up like an auction. Then you have the consolidation distribution phase, the selling phase, and Elon Musk was very public about the selling phase of the whales. Does that make sense? The whales selling. If Elon Musk himself is selling, I mean, how obvious? It doesn't get any more obvious than that, right? So then what's the next potential phase? If it's textbook Wyckoff theory, mark down and capitulation down. So Just please keep that in mind. That's for me. That's why for me, you know, I'm not jumping on every little red pullback in the market because I have experience in the market. Is if it's not the bottom, I don't need to fire all my capital. I don't need to use all of it. It's about preservation and protection of profits and capital during these times. Unless you're a bear, then it's a wild ride. But for most bulls, I'm just thinking more about like the, you know, normal investor or normal trader who's trying to do bull moves. Tesla, once we lose Apple and Tesla, if we get a death cross on those, then I know this is the one. This is the serious one, probably, because it hasn't happened yet. But in the bullish case, we might have this upside down head and shoulders. That's a possibility in the bull case. And the retest of the 960 or 900. But if it's not, you could also make a case on the weekly that this is that lower high, and then we are going straight down to 642 or 537, or at least like a 589. So the support to the downside 750 is 640, and then 557, and $500 for Tesla. Because you have to realize that this EMA on the left side, which is also a trending indicator, is that people have bought the dip, and then the FOMC was holding the market up. It was touching these lines support every single time, the 200 EMA. But this time, it lost the support. That's why it's different this time. Up here. But again, I never want to be 100% bull or bear. There's always that chance that, okay, if something happens with the Federal Reserve and the government, you know, what if COVID actually ends? Right? That would be extremely bullish, right? Or what if the Russia-Ukraine war ends sooner than we think, right? Those are all reversal catalysts. We just had earnings, so it's not going to be until next earnings that we might see a reaction. Although the China supply chain problem could, the companies were smart to talk about that now. So it's getting priced into the market actually earlier than later. All right, so hopefully I explained that. Resistance above 875, 976, and 1000. Take a quick microscopic look. It's not extremely oversold on longer term time frames. The 4-hour and 1 hour is in this oversold range. It is there, but again, we just talk about apples to apples comparison, the same comparison, the RSI of, let's say, 24. When's the last time we had 24? Okay, when's the last time we had lower than 24? Here. So we could get the day trading bounce is what I'm saying, but then swing traders are looking for a more serious support level before the bounce goes up. That's what I'm saying. Depends on the strategy. All right, so 15-minute, it's not extremely oversold. There's some momentum here right off the 382, so I can see this. Okay, do a reverse Fibonacci and say, all right, there's the targets here, 800, 817, 840. If it's going to bounce, day trader's going to try to do it. More power to them, right? All right. So let's move on here. Let's look at Twitter. Somebody asked me a question about Twitter. So one of my Discord members asked me about Twitter and said, is this gap support? Is this the support? Like, what's going to happen with Twitter? Basically, we have a gigantic gap hole here on the stock chart. Is this the support, or are we going down basically at $30 down here? Is what the Discord member asked me. So let's try to analyze this. All right. First off, I'll say about Twitter and Tesla is it's very fundamental based. Because all this price action, this was not technical only. This was all fundamental news. Elon Musk is buying Twitter-based information, price action. So we have to keep that in mind. For Tesla, it's all about, you know, car production. Are there any factory problems? Are there any recalls, etc.? Are there any C-suite, executive suite changes? And the financial report. Same thing with Twitter as well. But we have to be cognizant that this price action was kind of an outlier, meaning not every stock in the market went this high. And some of this information has been priced into the stock at this point. All that being said is, if we zoom out, if we're talking about pure TA, if we're talking about pure technical analysis, assuming there's no more fundamental changes to Twitter, then the support level on the weekly at least is $45. Excluding the gap, 43, 41, right? Even if the target is 30 down here, it's going to have to test all of this on the way down anyways. So day traders are probably going to play off of those. The more immediate one, 46.11 right here. But it is possible, if we're thinking about bear setups on Twitter, if this is our low, high, lower low, then we're actually creating the lower high right now. We bounce all the way to the resistance here at 52. We'll draw that on the chart. 52. And if it's going to turn to a head and shoulders, which it might, on right here, we need a couple more months to see if that's going to happen. This is a very long-term schedule play I'm talking about right here, horizon. It's definitely possible. If the market crashes nonstop, Twitter cannot sustain itself as the only stock that's going to survive in the market. It probably cannot, right? So it's that Warren Buffett quote, paraphrasing here, but when the water sinks in the ocean, basically, rising tide raises all ships, the sinking tide sinks all ships. And Warren Buffett's quote was basically, when the tide goes out, you'll see he's been swimming naked in terms of these companies, right? So the bad companies basically are going to crash. I'm not saying Twitter's bad, but I'm saying when the market really goes down, the bad companies are the first one to go down, right? So, Twitter's a social media company. So it is definitely possible we could get some serious volatility. I'm not saying Twitter's a bad company. It's just a quote. Right, so we hit this 50%. The 618 right here is 43.50. And then the 786 is all the way down here at 34. Right, is it going to go straight down? Probably not. But could it downtrend? It very well could. So I would watch out for that. For me, I'm looking not so much at the downside here. I'm actually just waiting to see a little bit more. Okay, is this thing going to get stuck here at this resistance? Because if it is, then I would just, this is not financial advice, but I might consider doing this myself. If the market's going to continue to go down and I have that belief in the fundamentals, then putting on a short position on Twitter would not be, for me, would not be ridiculous. Right, small position size with stop loss, with the stop loss right here, entry and take profits, not possible. I have to wait for it a while though, because Twitter without Elon Musk, look at what happened, right? Just normal market action down for half a year. And then Elon Musk entered, and then it's because his share price was 54.20 or something like that. So we have to remember that that's actually the target. That was his target, to buy the share price at 54.20. So if it never goes back up to 54.20, just watch out for that, right? Is it uptrending? Technically on a weekly it is, but I'm looking for, if it doesn't find support above 46 and bounce up for the next higher high, then most likely could pull back down. $30 support is a little bit, the target is, that's kind of far down here. That could be like a 1 year target from now. It's pretty far away, because that's to test everything in between in the gap, like you were saying. That's to test the gap first if it's going to go downtrend. Just trying to explain that to people. It is there though. That's $30 support. All right, but let's zoom in a little bit, because that was the big picture. It is, if we zoom in when we start going to a 4 hour, and this applies to a lot of charts, is we just lost the triangle support right now. Day traders could try to boost this up and say, no, let's go up one more time. That they could definitely try that, because it's low on the 1 hour. The bullish momentum is forming. You look at the price. Sometimes it likes to pierce down below this and then retest that support up. The equilibrium is there. So Twitter is a very unique stock. The 5-minute as well, the bullish momentum forming. But what's been happening in the market is the big money players, Wall Street, hedge funds, institutions, they know retail, we're trying to trade, or a lot of retail traders are trying to play these bounce names like Wall Street Bets Reddit plays in terms of the balance. All they do is come in with their $1 billion short and then just crush everybody out. It hasn't happened on Twitter yet. Just watch out for that if it actually does end up happening. Okay, so I talked a lot about stocks. I think it's important because anyone trying to trade crypto right now, if anyone's shaking their head and saying, why is this happening, is because Bitcoin and crypto is very correlated with the technology and the financial sector of the stock market. That's why I spend so much time on it. I know from experience that Bitcoin and crypto correlations are there. It does exist. If you ever are curious, for paper trading and for study purposes, I would recommend, if you ever wake up early enough in the weekdays, just open up a Bitcoin chart, like on a 15-minute or 5-minute, and then open up a NASDAQ chart side by side, and then you'll see they move very closely in tandem. So the bots are programmed to do that. It's a secret in the industry if you didn't know that. Right, so let's move on. Let's do a little bit of sector ETFs and little global indexes. I'm going long today because of what's happening in the market, right? If it was all textbook and everything's going fine for everybody, bulls and bear setups, I wouldn't spend so much time on it. Let's take a look at the sector ETFs really fast though. So these are the USA stock market sector ETFs. We'll start out with our finance sector on the daily. Very similar pattern, right? I'm not going to do all the full TA, but you know, we had our uptrend, sideways consolidation. This is a very obvious downtrend, right? So the March 16 bounce off that Russia-Ukraine news, we bounced up, but it's still establishing our lower high. Let me zoom in. Oh, let me zoom in a little bit for people. Did play that one bounce, that day trading bounce. But again, if this is going to be our Fibonacci levels, we are testing that 1272 range. We lost that. So where's the next level of support? If it's major, 33. Watch out for that. On the bear side, if it has a bull bounce, okay, we're bouncing straight up back into 35. Very nice trade. Energy. It's a different story here in energy. Going a little bit parabolic here because of all the supply chain issues. And again, this looks exactly like the US oil chart almost, right? It went parabolic in the uptrend, broke out of this triangle. I have to redraw this actually. Right, there's energy stocks rallying because of the supply chain issues related to the Russia-Ukraine war. Now it's in a tighter rising wedge or rising triangle, and we take a look here at the curve. Sometimes I like to draw a curved right there. It's right at curve support, parabolic support. But on our RSI is okay, it's starting to actually lose the momentum because the price keeps going up, but this RSI goes down. It's a bearish divergence, bearish momentum. On the weekly, it did hit our oversold range. We're starting to see one blip, one dot of pullback, which is why I'm concerned. Is the energy sector finally going to pull back? XLE finally going to pull back to 67 area. Watch out for this. Because this sometimes is the start of the crash. Even the monthly is in this range. So every time if you look at monthly RSI, what number is it? 75. The last time it hit 75, 76 is May 2014, like 8 years ago. And then 10 years ago, right? Right before we had a serious crash. Is it going to happen again? Possible. That's why I'm bringing it to everybody's attention right now on the stream, so nobody gets surprised. For XLE, it is an uptrend. It's good. It's good. One of the only sectors uptrending, but the pullback can definitely happen. That $68, $69 range is our support. Our resistance somewhere in the upper 80s. Okay, utilities, very similar. I'm not going to do everything. But utilities, see, it's just like energy. is uptrending, right? It's not finance sector going down. It's not tech sector going down. It's still trying to hold. One of the few sectors still alive, but just bounced off the support level and on a weekly establishing a higher low. But if we draw these trend lines, okay, if something actually bad happens with the utility sector and we have a little head and shoulders bearish, then it could pull back to 68 down here. I want to watch out for that if it happens. Next, our industrials already pulling back. See here, you could look, we can see this. I love using sectors, right? Uptrend, sideways consolidation, downtrend. But we have not had capitulation though. Extreme crash hasn't happened yet. If it happens, let us not be surprised. Okay, healthcare sector, consolidation. Consolidation. Basically, it's an opening broadening megaphone wedge, but still stuck between these two larger levels. Here, it's kind of angled consolidation. But still stagnating. So even before we started hearing stagnating growth on CNBC and Bloomberg, on these charts, I could see there's stagnating price action, slowing down. This is nothing. Well, this is less of an uptrend. So this is no trend, really, this sideways trend. That's what I mean. We have from uptrend to sideways. So this could be market indecision. Nobody really knows. Well, is COVID going to end? Are we going to go up? Is the FOMC going to keep raising interest rates? Right? That's what this is. Consumer staples. Consumer staples was uptrending. We did hit this head and shoulders right here. If we're looking at, it's not a pure one, but basically a topping out formation. Sort of like December 2021, and then there's a downtrending pullback. On the big scheme of things, almost like our energy sector, it's still rotating. The money is rotating around between these sectors. But we hit that resistance point on XLP. Hit the resistance, the short's going to sell off. Right. So if it's going to hit 73, I would be interested if it's going to be perfect textbook support. That's the target. Halfway here, day traders are going to try to play that bounce, but that's what happens in the market. Still uptrending, very nice. Trying to hold, but it is downtrending though. Okay, XLY, consumer discretionary. This tells me a lot. Right? If you look at all the sectors and then you see this happening, people are not, the companies that are in here in this ETF, basically customers are not buying their products, and then they're not making enough money in sales, and then their earnings are bad and you have a crash. It's all chain reaction, right? Because I've been thinking about Omicron and COVID for the past like 4 months, ever since that happened, is once people get sick, they might be spending less money on fun items. Although I did see that data and that report that when people are spending more money on like concerts and experiences right now, because that is something, you know, if somebody's not sick, it is summer and people are spending money in vacations, travel, concerts, experiences, that kind of thing. But in terms of the companies though, not doing so great. So we went from uptrending to the sideways consolidation to the downtrend. Let's go a little faster. Our material sector is consolidating sideways. Watch out for this loss of the support at $79. Once this gets lost, big trouble for XLB. Because then you get some of this capitulation crash action. Watch out for that. Real estate. How did I know this thing was going to double top and probably pull back down? This is my idea. Although the exact entry point was not, penny perfect, but how did I know? Because of this right here, this is the resistance, $52.51. Once I knew, okay, this thing is not going up. It's kind of like Twitter too, because this is what could happen on Twitter, but it has to have really bad fundamental earnings. It crashes down. There's some fundamental change. or the price bottoms out technical and then it bounces up, but then once it hits the resistance and cannot go higher and it makes a lower low and a lower high, game over. Bad earnings, this thing is going down. So those companies, it was Prologis and O Realty Income. It wasn't until after the earnings that they had bad earnings. Also, it's a little predictable this time because of the housing market news and how prices were so high right now. And people are, I kept reading news that people are kind of struggling to sell some of their real estate in some companies. So that all factored into that analysis, that play. Right. And once we lost the support on a technical chart, that's not good either. Fuel to the fire. Resistance. Resistance. We lost the support. So here, I'm looking at downside target. If it keeps going down, 41 or 37 or 40. Tech sector. I mean, okay, what can I say about this, right? This is almost going to look like QQQ, so I'm not going to spend too much time on it, but this is the technology ETF, and you can see that the giant head and shoulders is right here. So being able to identify that on charts has saved me many times. For example, before COVID happened, I saw a lot of head and shoulders on a lot of global indexes or double tops, and I sold all of my stocks in January 2020 and went cash before the crash, right? So similar happened here. Once I saw this, it's either I'm going to sell all cash or am I going to short something? Because this is just the fact that it's going sideways. That's not good. This thing is going uptrending sideways, head and shoulders, and it's not going higher. Sell or short or both, right? That's half of the battle of TA is identifying like what is happening on the charts. So it's downtrending right now. But again, were we just touching that 382? Okay, if it's going to find support there, that's okay. And then if it bounces up 144, but then I wouldn't be surprised if we drop down to 123, a little dead cat bounce and the continuation downtrend play. Definitely possible. Communication, right? So I'm saying you open a chart and you see this sector is doing terrible. Right? The head and shoulders, why did I circle this in just the gigantic blue? Is the loss of that support. Once we lose that, the bounce, the retest, game over. Game over. These companies had bad earnings. But it hit this, it's in the 618. So why I paused right there is, interesting. Interesting that this could be, well, first off, this chart is a very good case study of just pure price analysis. You can even turn the volume off. I would recommend studying this because this applies to everything, right? We're talking about stocks, crypto, Bitcoin. This happens on crypto all the time, every couple of years, where you have, again, the uptrend. At some point, there's a reversal. The type of reversal, this one is a very, very gentle rounding top. There is a little head and shoulders up here like I drew on a weekly. But it was there, right? And then you have almost like a textbook downtrend. So this is something that I would recommend that. And then even right here, before the pandemic happened, again, there's this double top. That is bad, right? The signs were all there if somebody knows what to look for and is objective about it. So again, there's no reversal signal that I'm seeing here. There's no double bottom or anything like that. But this is something I would highly recommend for somebody to just memorize this, because I studied this and try to memorize some of these patterns. Now, yeah, the double top. We'll just do these pandemic levels, right? Start of the pandemic. It's like, how did I identify we're going to crash? How did I identify we're going to reverse? How did I identify communication sectors topping out? I just only need 2 lines, right? What's the downtrend? Uptrend to downtrend reversal. That's basically all we need to know. And then somewhere in the future, there's going to be the reversal somewhere out here. Who knows exactly the market timing, because it's not up to a retail trader to decide that. It's up to the government to decide that, basically, and then the market at large will follow the policies for the most part. So it could take 1 year, it could take 2 years. What if it takes 3 years, right? So that's why patience is the key. For swing trading and day trading, though, it's a different story. But for investing, which is what I'm talking about in this particular stream, it could take a while. It is approaching the 618. Very interesting. The 56, if it is 50 or even 44, there's some deep value there. Could put a trend line to the top side. It's not really clear, but it is down there. And until it breaks up and we have a new trend change, it's a bearish market. So why do I keep repeating the same thing over and over every stream? Is because it's subjectively what is happening on the charts. And being able to identify these turning points, the trend, the turning points. Where's the bottom relatively? Where's the reversal spot? Where's the pattern? Where's the support, resistance, trend lines? Is it uptrending or downtrending? These are the questions that if a trader is able to identify it, there's a higher chance of success in any direction, any trade, for any asset. But again, technical analysis is only part of the equation. It's not the final solution. Because for stocks, it's all about fundamentals. It's about the financial report and news. Crypto is all about hype. But once the hype dies out, you get crashed like right now. So we'll switch to crypto in about 10 minutes from now. I just want to touch on this last SMH ETF, the semiconductor ETF. So it includes companies probably like AMD and NVIDIA type of companies, the chip companies. Very similar to QQQ, so I don't have to talk too much about it. But where's it going? Oh, even before that, what was the signal? There's a double top right here before the pandemic and then crash. And then we had another double top here and then crash. Right? So that's just one pattern on the charts that if traders are able to identify it and believe in it, execute the short back here. Right, it's 25% profit from 6 months ago or 4 months ago. Beautiful. It is textbook downtrending, seeking out the lower low, probably going to 206, maybe even down to 200 or 180 before we try to make our next lower high bounce. Could happen sooner than we think. Obviously, when you open up a watch list and everything is red, day traders are probably going to play that bounce eventually, somewhere in there. So watch out for that. Okay, let's switch over to crypto. And we have a lot of global crypto traders on TradingView and also who follow my channel here. The crypto, what was I talking about last time? So on total, this is the total market cap crypto index, is that once we lose this trend line support, watch out for the retest of all these support levels to the bottom, 1.6, 1.5, 1.4, and lower. Right? I know some people thought, okay, this could be the bounce. It could have been, but we had 3 to 4 times attempt on that. That's why I'm starting to not believe it anymore on the charts. Because if it's going to happen, it kind of should have happened by now. This shouldn't have stopped here, but it did stop here on the 9 resistant candles. And then downtrending. And again, this is happening because all global assets are crashing right now in the longer term time frames. So is this, we're losing this support. So where's the longer term support down here? 1.2 trillion and 1.0 trillion. That's the next large level of support to the downside. This cluster down here, somewhere in the 900 billion range. Once crypto loses 1 trillion, and I think psychologically that's going to start to rattle some people in the crypto sphere, right? Because if it's lower low, lower high, where's the lower low and even lower high bounce? But if it keeps downtrending, this is over, right? On the charts, crypto's not dead, but this support level, once we lose that, if it's going to be a dirty head and shoulders, which it's probably, this is not a textbook, but the general psychology is there, is we couldn't rally up to 2 to 3 trillion on crypto anymore. We had the evening star weekly pattern and it's bearish right now. Please keep that in mind for all assets. But it's getting to this oversold range here on crypto, and 4 hour, 1 hour, 15-minute is low enough for some day traders and swing traders to say maybe it's the bottom, but or a tradable bottom. It might not be the bottom of the market. But for me personally, I learned to not try to play the falling knife pattern. I need to see a real support level being established before I do anything. I'm not going to touch crypto right now. I don't need to. Right? It's about profit preservation, capital protection right now. Because even though it is a low bounce, somebody could, day trader on leverage. That's great. That's their bread and butter. But for an investor, I know that when we had the worst crash before, that crypto, a Bitcoin went down to $3,000 range. Right now, it's $30,000 range. So it depends on somebody's time frame horizon perspective of how expensive is it expensive relative to what, though? Is it expensive or is it cheap relative to this crash right here, or is it expensive relative to the COVID bottom, right? Are we up or are we down? It's somebody's perspective in their mind and the strategy they're using. But for me, I learned if we're crashing, excuse me. I learned that if we're crashing, to not cast the falling knife. So just watch out for that. The support on the downside. Excuse my voice. Okay, so Bitcoin. Take a look at the futures. And for anybody starting trading and investing right now, I mean, it's literally one of the hardest times in the past 4 years, 4 or 5 years. There's so many negative catalysts happening at the same time. I would highly recommend, just take a quick aside here, is that I would highly recommend paper trading here on TradingView for study and practice. I would highly recommend that. Because trying to start in one of the hardest trading and investing environments almost of the past, since the past recession, 2008, basically, or since 2020 crash, I would highly recommend paper trading. There's no reason to risk real money just to make a mistake and learn from the mistakes, right? You can make the mistakes for free and paper trading. You just connect it, you just click it, turn on how much money you want, adjust the commission percentage. Actually, let's do it right now. Just turn it on, you connect it, right? And then your equity account balance default $100,000 fake paper trading dollars, right? And then here you could change your commission settings for your broker if you're in crypto land, trading options like what's going to happen visually on the chart, and then you could literally paper trade as much as you want. For me, I have to click USD based pairings for crypto, but you could paper trade stocks, ETFs, commodities as much as you want here using the trading panel. It's phenomenal. You can't trade every asset. It has to be either USD based for me or like a real stock company or ETF, and just trade the setups. If you wanted, for example, try to long this right now on the Bitcoin chart, like if we go to BTC USD, just go for it, right? I practice that way a lot, right? So somebody's, instead of wondering, oh, is it going to be a bottom? Somebody could paper trade and say, well, what if I bought, I put X amount of capital and I was going to see if it's going to bounce for this at least 2-to-1 risk to reward ratio, and then just see what happens and learn from it, right? On paper trading, so easy. And it's a good habit too, because why I like the paper trading panel is because here TradingView knows You need the take profit and you need the stop loss, and it's practice. This is trading in terms of order execution. What kind of order type am I going to do? Usually limit, right? You're going to be a bull, you're going to buy. At what price? How many? What's the risk? It's a phenomenal tool. What's the dollar risk right now for buying 0.25 units? What's the percentage risk? Where's my take profit probably in the price? How many dollars is that? What's the percentage? That's getting more into being more advanced, right? I know people are getting all hyped about crypto, but actually managing the money and the order and the trade can actually determine success or failure. So paper trading is a wonderful tool to learn on and practice. So there's no reason to lose tons of real money before realizing a trader could have just studied and practiced for free. Okay, somebody has a question here on TradingView. Looks like a rising channel breakout on BTC. Do you think it will retest the trend line before going further down? Okay, so this person's talking about rising channel breakout. Are you talking about are you talking about this channel, or are you talking about are you zoomed in a lot on Bitcoin right now? So if you're talking about, you might have to clarify that, because rising channel, this was a rising channel breakdown on the daily. If we're talking about the daily chart right now, this was the channel that was rising, but actually a rising wedge or a rising channel sometimes a bearish pattern. So if it breaks down out of here, it could retest, because for example, it's so. Okay, so this person's let me explain it both ways. So on the daily chart, right, this was a rising channel on the day chart and it broke down to the downside. We lost that support. So the problem is okay, where is it gonna temporarily bottom out, a tradable bottom, which is gonna be related to probably the stock market as well. So when it's not perfect, but sometimes either Bitcoin will bottom out first or the stock market will bottom out first, and then vice versa one will follow. So so it had the breakdown. Oh, okay, so that's what you're saying. So it had the breakdown, and then it could retest, very well retest. So to answer that question, we just zoom in, because it is oversold, and I'm sure a lot of traders are watching this right now. The 5-minute 15's already had its bounce underway, the first one. Now swing traders are starting to look at this and say they're starting to get interesting, because it's low RSI. The bullish momentum is possible, but I would like to see a stronger level of support. Yes, we already talked about the VIX on the stream. So it is definitely possible. But again, what I've seen the traders, basically, this happened to me too, is where it looks like is this particular bottom, like let's say here, right? Let's just do apples to apples, the measurement of 25%. Okay, this high, 25%. Did it bounce? It did bounce for day traders, but then was it the bottom? It was not the bottom. So that's why I'm being cautious. It depends on somebody's strategy. If somebody's day trader, swing trader, this might bounce. It might, and we might get a little dead cat bounce, they say, right here to test that upper resistance. But if that does not happen, it could keep going down, or it could bounce up and continue the downtrend. So we just talked about like 3 different time frames: short, medium, and long right now. So whichever one you're trying to play, I would recommend just watching out for that. Yes, it could go below. Somebody's talking about right here, the 28,000 low wick down here, the candle wick, right? If we look at a weekly though, on my idea of, for example, in in my profile, if somebody digs into my profile a little bit, I did write this idea on the weekly that this is the double top way back here, like last year sometime. So the fact that once this rejected down to the downside, I knew we're not going higher right now. So the support on this particular, if we zoom out to a weekly, is then we see that I'm going to draw this large channel. It is generally at the support range. It's testing it right now. So if it's going to hold, great. We have a nice bounce, and then we try to get another lower high, right? Low, lower high, low. If it's going to hold, lower high, great, phenomenal. Back to upper 37s or 35K. But if it's not, it pierced way down. Could even try to retest that and the downtrend out of here. Because remember, Bitcoin is a lot more expensive than it was. It's up 600% since the pandemic low. Right, and then for additional confirmation, if somebody really wants targets, okay, our pandemic low to pandemic high, it's right approaching the 618 zone on this weekly chart, on the daily as well. So it could go into, I know crypto, the bots, the algos, and the market makers, they like to crush. They know people might buy this. This is a strat of the whales. Companies is they know people might buy this in day trading and swing trading, and they have a stop loss set up. So all they have to do with millions and billions of dollars is sell and stop everybody out and then buy here. So I would recommend, if somebody's even thinking about playing this, because this happens in crypto all the time, is cascade the order and always expect that it's going to go further down than I think. So I just said a highly advanced strat. Right there is because I know what the market makers are going to do. If you watch the level 2 on crypto, it's all bot orders. It's all algorithm. So watch out for that. I do not use the PUL or PUL multiple indicator. Could be good, but is it on TradingView? Let's just look at it. Is this thing on here? Is this the one right here? Let me just open all of them and see if any of these make sense. Yeah, sometimes it's a good study. Sometimes if there's a new indicator, I'll take a look at it. Let's take a look at it right here. This one's locked, but let's look at all these. Any of these make any sense to me? But at a first glance, because I basically used almost every single indicator on TradingView on the public, it's not giving me enough information. So I would recommend there's other different indicators that probably can show relative bottoms faster than that one. It's there. I've seen it before. So, but if you like it, more power to you. All right, let's move on. Right, it's always when we get to the crypto section, we get a lot of questions. So let's move on to Ethereum. So Ethereum right here, let's focus on the price action right here. There's potential head and shoulders on Ethereum, or actually it's coming into play, right? On the weekly chart, there's a rounding top. This is a bearish formation. If I'm objective and I'm not even thinking about, okay, yes, we're day trading bouncing at 5 o'clock in the Asia session. If I'm thinking long term as an investor, this is head and shoulders on Ethereum. Well, the question is, are we going to lose this neckline right here? What is this neckline measurement? Could be, at a worst case scenario, negative 90%, which would be $200 target. Worst case, if this is 100% true, which is not always the case, but if it is, I would rather buy a $200 Ethereum than a $2,000 Ethereum for investment purposes. That's crypto, right? But in terms of short term, okay, lower high, lower low. If it's going to hit our 1800, great. Could see a weekly lower low in that established range there in the 1800. But right, again, the day traders are probably going to play the balance, as the algo is actually more so than the day traders. Where's our lower high and where's our lower low? But if somebody zoomed in too much, we're not going to see that, right? So I'm calling it right now is if this is going to turn to a head and shoulders, beware of some serious, severe downside capitulation on crypto if it happens. The immediate resistance is the candle of today, so 2538. So it could retest that, no problem. And again, it is just like Bitcoin, like you were saying earlier, there is that kind of the previous wick not capitulation, the wick support over here at 2170, 2165. But you see the next level down here on the support level is more like 1800 range. 2000 is the support as well. So if we hold 2000 on Ethereum, great. If not, then look for more downside. Very simple. Next, look at Solana. So here's an interesting example where we use some alerts here, right? I put this alert support level potential breakdown number 2 like 2 weeks ago, and that's all. If somebody's futures leveraged, or if somebody just wanted to know, are we breaking down or breaking up, it's very good use of alerts. So if somebody has a pro account, premium account, you could send multiple alerts. It's phenomenal. That's how we get ahead of things instead of reacting to opening a chart and reacting. Is you already knew, right when it happened, look at my phone or my alerts. Oh, we have that breakdown. So on this particular channel, right, this was the target, the 37%. So that's why we draw kind of these X's, right? If it's going to break up, which it's probably not going to do that anymore, could hit that 160 range to the upside. Again, we draw these trend lines. It is coming down to that support range, right? So that's what I'm saying. Day traders, they're eyeing this right now. Swing traders waiting for a little bit more information, right? Because if you get this bounce, here's the scenarios that could happen. It's crypto, so the bots and algos are always going to push it further than I think. So if I want to buy here, they're going to push it all the way down here and then rebound. Right? It happens all the time. All the time. If you study charts, you study the level 2 enough, you watch it happen in real time. So, but we know our support range is somewhere down here in the 55, 56 area. And we did have a little capitulation bot algo crash. Right? Day traders going to try to play this bounce, but swing traders are looking for more of this action, making sure that the support is real, not just one candle wick down and a V-shaped recovery. That's day trading algo specialty. I'm talking about multiple support level touches, and you'll see once that happens, then the market and there's a bullish catalyst, then we get that huge short squeeze reversal to the upside, right? So somebody's like a 1 minute, 5 minute scalper, great, more power to you, and hopefully all your trades go really well, right? The 1 hour, 4 hour is there too. It's there, but it is a little bit of a falling knife at this point. So I'm not, as a swing trader, I'm not touching Solana. I'm not touching cryptos personally right now, but it's because of my strategy that I don't touch falling knives. Just watch out for that. The support level probably above 58, 59, and the reversal could go all the way back up to 60s. Mid 65, 70, it's definitely possible. All right, Cardano. Wow, this is how we know TA works, right? When I draw this trend line streams ago, and then it crashes perfectly into the X, marks the target spot. So this is why TA is very, very useful for downside or upside moves. Because I'll redraw it, right? Because what do? I just got this top resistance zone, so to speak, on the wicks. And we get this bottom, right? And now we identified the downward sloping channel. So we knew, or I knew that, okay, if this thing's going to top out here, I'm not going to buy here. I'm going to sell here. If somebody could short on futures or a futures contract, that's possible. Double top to the downside here. And then where's it going to crash to? Somewhere in the middle, at least. We had the reflection, inflection, reflex, and then correlated stock market crash right into the X market spot. So now what happens on Cardano is, now the question is this support going to hold or not? Is it going to turn into this choppy right here action, which definitely probably is going to happen? If it's going to happen, well, I'm going to let it happen, right? Day traders are going to play the first couple bounces every single day. If it gets another pullback, then it's going to turn into an exact March 14 scenario. And then if we get a double bottom, then I might come back into the market like we did on March 14th. That's how the swing traders knew. Or you draw a trend line, watch for the breakout, right? But just one little red candle and then one green candle, bullish engulfing, you know, that's a day trading, you know, reversal. Need a little bit more information than this, but I'm saying it's in the zone, the support zone. But there's not much support here. If you look left on this candle here, there's not much support. There's a lot more support at 35 cents. So always keep that in mind, is that crypto, since they're essentially like penny coins, a lot of them, they crash down to nothing very quickly. So the 786, that's right here. We lost that 786, the 68 cents. So the next level down could be probably increments of 10, 50 cents, 40 cents, 30 cents. Watch out for that. And then watch out for any potential reversals if somebody's trying to swing trade that. Next one, XRP. Hello, welcome to the stream. I'm going longer today just because of all the volatility that's happening in the market and trying to explain to people why is it happening. And now we're in the crypto phase of the stream right now. So we have our resistance that we drew here, XRP. So in terms of technical analysis, this is not good. When we have the triangle breakdown, which held 1, 2, 3, 4, 5, 6 times, and this time, just like somebody asked me earlier, I can't see the comment, but the retest, yeah, it definitely could happen. The Bitcoin crash and the retest, it happens, but it's still downtrending right now, lower low. Watch out for that. Thank you. Watch out for that. XRP, I mean, very popular apparently in Europe. Not as popular in America because it got banned or kicked off the exchanges. They had an SEC lawsuit like a year or two ago or something. So we just lost the 786. Watch out. The support levels to downside 41 cents and then 35 cents right here at the 0.88. So it is downtrending, and we on multiple time frames. So watch out for that. Correlated with the stock market. Right here, low, high, lower, low. So somewhere here it's going to reverse, and I'm watching for that. I don't trade XRP personally, but I still watch XRP. My 4 hour, 1 hour is definitely there. So swing traders, they're probably getting a little bit interested in it, but you can see here that low RSI, it's not always the bottom, right? Right here on this blue, the RSI was low, but we still crashed. Right? So sometimes the price action and the correlations overrides the TA indicators. Okay, next one. I'm not going to do all these. There's too many. But it's basically the same setup for almost all of these. If you just look at this candle, right? It's pulling back down. And then where's the reversal? So what I want to see as a swing trader is like this reversal. You find the support bottom, or uptrend reversal like that, either one of those. But when it's just capitulation, red candle down, I'm just going to let it happen. I know half of the FOMO is not FOMOing into crashes as well, right? Because FOMO sometimes happens on the way up. Like here, let me erase this. Like here, let me mark the spots of potential FOMO. FOMO could happen here, but FOMO could also happen here as well. So meaning that it's going up and somebody chases and they bought the top on accident and it crashes on them. That's bullish FOMO. Bearish FOMO also, or oversold FOMO, is it crashes and then somebody could think that's the bottom of the market and then try to buy that, and it's too early. right? Or a bear is saying wants to short a stock or something, but it's already at the bottom and then it gets stopped out. So that's FOMO as well, right? So for me, I'm looking for real price action patterns. This is how I usually survive catastrophe on crypto. It's been serving me well. The wedge breakdown. So if we measure the wedge, okay, 90%, again, that's the worst case scenario. Take us all the way down to $5, AVAX, okay? But if that doesn't happen, next logical place, 34, support, not much support until you go down to 20. Are we going to retest? Possible, the resistance at $50 above. Watch out for that on AVAX. Dot. Okay, this is an interesting chart. Why? Because dot, you can already see, boom, right off the bat, right in the middle, we have this double top. That is bearish. Just like Bitcoin. So dot is very correlated with Bitcoin because Bitcoin did the exact same thing, except the bullish bounces are kind of not so great. But it is at a point of support right now at the 1050 area. So I would just Fibonacci this. I'm using a Binance chart. Low to high, Fibonacci. Now it's not that impossible to chart. There was this support level that got lost. It was almost, it was nice. We were having some ascending triangle action. It was almost bullish, but then once we lost the support at $20 here, when Bitcoin couldn't bounce up and it was in that rising little wedge channel, and then we failed out of there, like bulls, not bulls, but the price failed out of there, and then it went to the downside, so it broke bearish. Okay, I'm not going to fight this, right? Lower high. So where's the bearish support? 877 or 586. Watch out for that. I'm talking long term right now. Dogecoin. Here we have two targets on Dogecoin, and these are basically Fibonacci targets. There's the middle one in here as well. But Dogecoin is still downtrending. We zoom out on a weekly, very obvious, right? Lower low, lower high, lower low. And this is why I learned on crypto is sometimes low price is not the lowest, right? I'm watching, yes, I see the MACD momentum is building, okay? At some point, that's going to pop to the upside with a little bit of short squeeze action. But right now on the daily, we are death crossed ever since last December. And the resistance holding very strongly above. It's not 1 year ago or 1.5 years ago when we're uptrending in this beautiful side over here on the left side. It is not actually 1 year ago is actually the top. So I'm talking about over here. But on Dogecoin, we had this triangle here and it failed. It broke bear. This is what happens on crypto. If there's no real fundamental changes or nothing, and the stock market's crashing, then there's a higher chance that all crypto will crash down over time with the stock market, which is why I'm going long on this stream. Because I've seen it happen before. 2018, we just studied that chart, 2018 and 2020. So after, the $20,000 Bitcoin rally. I might come back to that later for an example. Okay, SHIB, there was the bounce. This is the old chart. Let me erase everything. We did have that intermediate bounce here from the 2100 to 2700. That was a nice play. But now SHIB is death crossed. Not good. Correlations, right? This could have been a cup and handle, but it failed. Right? So this is now the play in terms of futures, just shorting everything to the downside. How far down do we go? We're hitting the 0.88. So it is interesting. It's getting close to a relative discounted, like a really discounted area, like a negative 80%, negative 90%. So somewhere here, we might get a bounce. It happens sometimes because the daily is oversold. Our weekly is not super oversold, but our 4 hours oversold, our 1 hour is oversold with the potential upside down head and shoulders on here. So we could get a bounce on Shiba Inu soon. The day traders are trying. It's actually oversold in every single time frame, so that's like ideal for somebody trying to play that strategy. But In terms of where's the upside target, the resistance upside 1741 or 2000, right? Can it go lower? It can, but it's getting into the zone of, well, if it's not going to bounce here, it's probably going to crash completely, right? Because there's not much support on this left side. It's going to crash, it's going to go down. But if it's going to reverse, that'd be very nice to make that lower high. Or it's going to do this. But the death cross on all these time frames, we could get a bounce overnight. It's going to be, this one might be a little bit different. AXS. Somebody asked for AXS. Okay, AXS. Okay. So here's the thing: is somebody asked me for this before. Is if we turn all the indicators off and only look at price action, is it, for me, the question is it uptrending, sideways consolidation, or downtrending? It's downtrending. And then once we do a little bit of analysis, I was saying this was that total market cap resistance right here, and watch out for that. That's the potential weekly lower high right here. And we have a giant head and shoulders type of formation on the weekly. This is not good. Once we lost the support here in the pink, then I knew it's downside. It was all there. This is all discoverable on the charts. So then where's the downside support level? Well, it's right here at 2123. But yes, we have some bullish momentum and some low RSI. There's also bullish momentum on the weekly building. Could take a while. The 4 hours also oversold. The 1 hour is also oversold. The 15 minutes oversold. The 5 minutes oversold as well. So it could get a bounce. Right, bounce to where, if it's going to be extended, let me look at like a 1 hour to get a balance for everybody. The 1 hour could bounce up to like $26, right? But this is not, it's kind of in no man's land if you're looking at it from this particular perspective. But if it's going to be that, it's going to be a 5-to-1 trade, like a 2-to-1, 5% to 10%, I mean. Right, if you look left for support, go to daily. It's not much. That's why it's crypto. There's usually not much support. There's support at 20. There's support at 15. But it's still downtrending. So always trying to pick the exact bottom is tough, right? Because here's a perfect example. Right here in this pink vertical. We want to make sure we're not playing the January 8, 2000. There could be a dead cat bounce, but that's not the final leg down, right? The RSI is in a similar number. It's either the dead cat bounce or it could be the start of the consolidation, next consolidation support phase. That's why we could be starting the support formation at the start of the stream, right? We could get day trading bounces, totally possible because of what's happening right now. Right? If futures are up for stocks, crypto, definitely possible. But then might get shorted down. I want to see something. I want to just see something more than just one candle up. But it is oversold. It's not like we're up here in March 28 and everything is on the high side and then I knew we were going to come down. So there's actually a slightly higher chance we could get a bounce on AXS. But could be a while before we get these big moves in terms of big, like 50% rebound type of things. It's definitely possible. The 76 is the next target up, but it's going to take some time because if the market is capitulating, because if you can see right now, we were green for 15 minutes on the start of this stream. But then I hope everyone realizes that while I'm streaming on the 5 minute and 15 minute and 1 minute, the bots, the algos, and the traders, they are shorting right now. Continuation to downside except for US on my USA watch list, right? So be careful of that. Stop loss, always needed. Position sizing, meaning smaller positions if you're a bull in a downtrend or just don't do anything, right? Sometimes what I like to do is chart out, like on AXS, for example. If I Fibonacci top to bottom, these levels are all here. that, okay, we could bounce up to 618, and then if it's going to fall down, we could test the support 45, hit the 786, and go all the way down to 0.88. So it's all here. It's just a matter of time. The reverse is true. If AXS, let's just say at some point, wherever the bottom is going to be, then I want to see the trend change, reversal, and support. Let me go rapid fire. I'm only using a USA list because that's the only thing I could trade myself, living here in the USA. I can't do Binance.com anymore. Because Binance.com in 2019, winter, they migrated everybody off of that exchange due to legal legislation, country laws. All right, so MATIC, again, lost that support. And again, it's really interesting. This looks like QQQ, right? If you rewind my stream to the beginning, it's the Wyckoff theory, and I kept saying this to watch out. I'm cautioning people right now. Is we had the accumulation, we had the markup, we had the distribution. Where is the markdown capitulation? We could be witnessing the start of the crash. This could be the start of the crash. Yes, we're getting a little day trading bounces, but crypto is not supposed to really be this expensive in general. So watch out for that. MATIC, let's get some Fibonacci targets. We already lost the 618. That is not good. So 0.786, 68 cents target right here. That's the next major one down. If it bounces up, then dollar is the resistance. Near, same deal, similar. But near is, I would say we have this resistance double top. Watch out for that. So if this turns out to be a weekly M, this thing could crash down significantly. Somebody asked me about this like a week or two ago. So where's the 618? 618, 841. Can also draw a trend line. It's trying to hold that. So I know people are like near for the fundamentals on the project. So if it holds that, nice. But if not, you can see what the bots and algorithms are trying to do. Short it down here, buy down here probably, or somewhere here, and then bounce it up. And then maybe if we lose that. So support levels, $8, $7.50, 620 something, 621. Watch out for that because the double top is kind of serious. But also we're just losing it right now. It's happening as we speak on that particular candle. So watch out for that. Adam, this green that's an example of if we happen to hold that scenario, like I left this on stream last time, is if we happen to hold that, this could be the potential bullish bounce. But if it's bearish, not happening. Adam, you have this trend line. This one's easier to draw. You have this trend line right here. Once we lose that, it's bad news. That is bad. So no matter how good the project is, if the asset is crashing, I learned not to fight that and just let it happen. Sometimes as a crypto investor, the best thing to do is nothing, meaning protect capital, protect cash, protect money, not chase the downtrend. I learned if I try to chase too many downtrends and catch a falling knife, it's pointless. It loses money. It's a losing strategy, right? Because the psychology, I was thinking about this the past weekend, is everyone generally knows that the saying is on Wall Street, you hear it on CNBC all the time, is buy the dip, buy the dip, buy the dip. But then at one point, buying the dip is not the strategy anymore because it's the end. And buying the dip does not work. So buying the dip here to me it's not the safest strategy of capital. I want to see a real reversal trend and then I'll buy the dip, but not this. As an investor, if you're a day trader, it's different story because you're looking at like a 5-minute chart, a trader. But we lost 618, 76 right here at 1070, and then support 859, 679 to downside, resistance to the upside, $14, $17. Definitely possible, but once we lost this structure, which is actually measurable, let's see if we hit that target. It's a little ridiculous target, but it's only half the target, right? The full target will be all the way back down to here, which could happen on Atom if there's an extreme crash. So I remember when Atom was like $2. Okay, Litecoin. See, this is an example where this particular double bottom right here, this failed. And then if it was bullish, the target was up here, but not, so we lost the support on the charts, and then we redraw. So this is not the greatest chart to use because we're missing a lot of information here in the 2017 to the left side all the way down here on the bottom. But at least we have some of this information here. Getting close to that 0.88, all-time high, 73% off. It's getting close, getting very close to a nice spot of value. If it ever gets down to 50, that would be really interesting because that's that low support range, right? But again, lower low, lower high, lower low. So it's just seeking the lower low. I would not be surprised if we try to even touch the 50s or 60s for the support range. Daily just got into the oversold range. Again, assets following other assets, meaning the correlation between crypto and stocks. The day traders are going to have a good, fun time with this one, though, in terms of trying to catch this bounce that's happening. But I still remember, I think if somebody's starting right now, let's say they're starting to be a crypto trader now or a stock trader now, like this year in 2022 or past 6 months, I would actually study the pandemic crash on multiple time frames. So like open up Bitcoin or open up S&P 500 SPY, and then I would, because I spent some time studying this, what does this feel like in the market, and how do I know where's the bottom of this? Because even in the coronavirus crash, there was a bottom. There was a bottom, and so I would highly recommend trying to study that. Because if it's going to happen again, or 2018, right? Like, how do I know where's the bottom in this chart? How do I know? Using the price or volume or indicators, whatever you're using, how do you know that? And how do you know a fast flash crash, 2020 pandemic style? How do I know that's the end, right? Those are questions that's probably going to help you and help me, any trader, tremendously. Okay, Uni lost the support, still downtrending. I mean, even Uni lost is 0.88. It's 86% off. Very interesting. It's getting to that range of looking like we could get that bounce. Low, high, low, high, low, high, lower, high, lower, low. There's not much support till down about like $4 range. Watch out for that. The resistance is very obvious. This is pink line. That's still here, $8. It's kind of floating in space, though. That's always a little bit dangerous when you're downtrending and it's floating in space on a daily with no clear level of support formation. I would watch out for that. I'll just go a little bit longer. So again, all these potential bull setups, they already happened. This is the dead cat bounce type of thing. And then if somebody, it's up to the trader to take profit or set a stop loss. So to protect the profits. I'm not going to go over every single crypto because with crypto, a lot of times it looks almost the same. So I don't have to really draw it all. But once we lost the trend line, that's bad news. I could just draw one line on a daily, and I know once we lose this one, that's bad. We have the downtrend. Right, it was an upward channel. Almost every dip was a nice play on the bull side in 2021. And then at one point it stops working. And then I stopped doing that, buying the dip strategy for trading. There's no point. And now it's turning into this downtrend. But again, I would recommend for people to try to at least take a look at, I would recommend take a look at QQQ ETF, the NASDAQ 100, the NASDAQ ETF. because we saw this formation is exact same thing. We had the rally, then the consolidation on QQQ, and now we're seeing a markdown phase. Watch out. It's up to the market to decide how low is it going to go. How low is it going to go? We get a baby bounce in here, but how low is it going to go before everyone quits the market? For me to re-enter crypto, the best time to enter is when there's extreme fear and everybody quit the market, like everybody you know quit the market. It might be down here. Okay, Tron. Tron actually holding. So very different. There's Tron held the support trend line of 5 cents and then we rallied, but it's still pulling back, but it's not like crashing down here. So I did draw this blue as the target, and then we had a little uptrend and hit that target. So Tron with a little bit of this upside down head and shoulders uptrend reversal is nice. Let's see, do we hit the 20% target? This will stick. So I'm going to turn the magnet. We hit the target, 27%. That's why target's done. Hit that Fibonacci resistance. Traders are out of there. They're done. And then let the pullback begin. So Tron is a little bit different than these other coins, but you can see it's in a larger symmetrical triangle. So it almost essentially hit the top of here. So I wouldn't be surprised if it pulls back all the way down to 0.58 again. It's resting above the 618 right now. Next one. Bitcoin Cash. We drew this downtrending. It's not, this is a good case study as well, is if I have only this information of 2020, BCH data goes way more further than this on the left side. But even just this, it's the uptrend to some kind of consolidation area and then the markdown. It's just classical TA. This is like old school technical analysis. It still works really well. We have the downtrend, low, high, and then the lower low. It's on this chart, it's testing a low quite a bit. We lost a 0.88 on this chart. This is the pandemic low, March 16, March 15. So it is 86% down from the high. So it is in a very, very attractive range to some swing traders. It's just a matter of, are we going to get one more flash crash capitulation before some kind of reversal turning period? Very interesting if that's going to happen or not. But it hasn't happened yet. That's why I can't call it. It's technically still in a downtrend. So until I see reversal happen, it hasn't happened yet. Ethereum Classics, very similar. Hit my blue target, but it can even go a little lower to like $18. There's a support here, $17 range. But Ethereum Classic, hopefully if it double bottoms here on the RSI, hopefully it stops here, and then we can get a nice little bounce going on in the RSI. But this is what we want to see as swing traders, as crypto traders. Everything's low. It's good. It's not like 1 month ago high. Everything's low. It's just a matter of, can it bottom out? And then am I willing to put some small amount of risk at least on it for a trade? Investment's a different story. I need to see way more information turn around than this. Algo lost the support level. The thing with Algo is it has not really had its big lower high bounce. Probably lost popularity at this point. So we had that trend line retest, and now it's on downside. So there must not be that much interest on this one, this coin. So if it's going to crash, just let it happen. 786, if it loses that, 0.88 is the next target to the downside, 40 cents. If it happens to bounce up, the immediate resistance 75, which is actually good profit, but trying to catch that bottom. It's not extremely oversold. That's why I would caution about this one on daily. Might see a little dead cat bounce to the upside, but it's not crushed to the downside like some of these other names. It's only 75% down from the last year's high. If this was something like 90% down or 95% down, that's a very, very attractive range because that's 40 cents lower than where it is right now. XLM, It did not break bull. We broke bear. XLM. Very, because crypto, it happens 3 times faster. The trend change, it goes up and then it just flips around. You have a topping formation, just straight goes down. So it looks like it's in, on this chart, it's almost approaching the 0.88. We have the loss here. So the 0.88 is what, 12 cents? That'd be interesting level of support. And check out weekly. It's in a weekly downtrend as well. There's overwhelmingly a monthly downtrend as well. So there's just 3 major time frames. 3 major time frames. Oh, so my RSI, somebody's asking, is the old RSI. It's a really, really old RSI. So actually, because I know what you mean, if you open up the new one, this is RSI version 2 or something, or version 3, it's updated. It's completely different. This one has the EMA inside. If you look at the settings, there's an EMA here. You can turn it off if you want, right? Mine, I customize mine just for visibility. So like I turn the background fill, so I turn the MA off. Sometimes I use it, sometimes I don't. And then I turn the fill off and then I change the color just like something else. And then I made it, so I'll just do it so it looks like mine, right? And then I change the color of the band. So that looks more like mine. I just turned some things off and changed the color. It's not the default RSI. It's still, the RSI itself is still the same though. It just looks different. Because if you just open up the default, it looks like that. There's an EMA on there, which I think, I mean, I respect this indicator. It's though, I think though, it's the RSI that's the more important thing than the moving average. Right? So I just showed you the settings. I mean, you just play around with it till it makes sense to you. For me, I remember when there's RSI version 1, it would look like this, just use dark purple, and there is like purple background, and I just turned those off so I could see it better. It's basically the same. Just whatever works for you. I know this might not work visually for somebody, and my MACD as well is slightly different. It's just the colors I like. It's just the color. Yeah, the numbers, the inputs is exactly the same. This is actually the old RSI. So if you look here, it's the old RSI. But the source code, if you're like really into it, is it's probably the same thing. It's kind of sad. I mean, you might have to like pull up an old school one here at this point because this is the updated one. Like I said, you could change it. They added the MA here. The chart is the same, right? But then you could turn all this off if you want the old school version. The old school version, there is no middle band. It's just these 3. It's upper band, lower band, RSI is classic. Then just change the color, make it thicker, and then it's the exact same one I have. It's the old one. It's just RSI. All right. Ape coin. Where's Ape coin here? Ape. Here's the thing. Ape coin. I mean, when you get a pump, this is kind of like an IPO pump to me. It's like an ICO pump. This thing pumped up. But for what, right? Like, what are the reasons? There could be fundamental reasons. It could just be hype. I know there's NFTs universe. But at the same time, though, we have to be objective and think about, like, what does it do, right? What does ApeCoin actually do? And is it going to replace, are there any better coins than it? Because there were cryptos before Ape existed, right? There were coins before anything existed. So, yeah, I would caution against this because it kind of feels like the old school like Dogecoin hype or a long time ago. There's some coins that are erased like Nano, right? XRP got delisted, so just I would be aware of something when it goes straight up. When it goes straight up like that, and then it just goes sideways and then it just crashes. It's losing momentum, right? Also on this particular chart, there's not enough information. You have to really look at it at like a 1 hour, 4 hour-ish type of chart to actually see any reasonable price action. So on this one, because of what's happening on the 4 hour is you have to, why did it crash? We had a double top, right? Do we have any reversal signal down here? Not yet. Is it low RSI? It is, but it's been lower RSI for a month straight. So this is not helping that much, right? So it's just low, high, lower, low, and where's the lower high bounce? It could happen as soon as 1 to 3 days from now. The question is though, is this the bottom, or is the market makers going to try to push it down one or two more times? That's the risk of trading, because we never really know what you're going to do. There's just chance. There's a 15-minute bullish divergence. There's a momentum here. So okay, somebody's trying to play this. Somebody's already playing it right now. The boss and the algos. The upside potential is 20%. The downside, large stop loss, at least 5% to 10% on a small amount of capital. So on a day trading, it looks like it wants to bounce. It wants to bounce. Right? But if something is 64% down, that's up to you. This is not financial advice. On the charts, however, you know, it depends. That's a tough call to make. I cannot make that decision. I can't make that call, because it's kind of like Bitcoin. Is if somebody buys Bitcoin at $60,000 and then it crashes all the way down to $6,000, what is somebody going to do there? That's a question as a Bitcoin investor or holder. That's like something you kind of have to figure out for yourself. Is that with crypto, the unspoken rule is, actually with all investing, the unspoken rule is a trader investor can lose some or all of their money. So that's why trying to study and learn technical analysis will help. It helps a little bit to, or actually it could help tremendously, depending on someone's skill level, to try to avoid the tops, like going bull buying at a top. Right? I just saw a wonderful quote right before I started the stream, and I might put in my Discord, is that a 90-year-old famous hedge fund manager, he's like one of the best in Wall Street, 90 years old. He has this book, and one of the quotes said that the majority, I'm paraphrasing here, but he said, but the majority of the world buys at the top, but not everybody buys at the bottom. The majority of the world buys at the top. So I'm not attacking you. I'm just saying that's just something to learn. Even for me, is that okay, if everybody's buying something like and the charts are telling me like, uh-oh, is there some kind of double top, then maybe I might want to back off a little bit, right? So you might want to watch out. My social media links are in my profile, and the Discord, like I'm not talking in there like every single day. It's just I'm more of I do more stock trading and crypto trading. And if you want to learn from me, this streams are the perfect place. If I ever get a chance, I keep saying like I might do I might make other content, but for now, because I'm active stock and crypto trader investor, these streams is probably that's what I'm doing for now. It's tough. Like I also remember there's a guy who bought the top of Dogecoin right here at 65. That's tough, right? And it's as an investor and trader, that's like we want to use technical analysis, because up here there was a head and shoulders, and that's bearish, meaning it's going to go down, right? Somebody asked me a question. When do I think the trend is going to reverse on Bitcoin? Well, on the price, it needs to. it's more likely to do it at a level of support. So instead of just reversing in the middle of nowhere, I'm just going to draw a random line like in the middle of nowhere like that. If that happens, that means something fundamental news happened. Like if the USA say like, oh, we're going to switch all the money to Bitcoin, like, oh my goodness, this thing would skyrocket, right? But if it's textbook, that's why technical analysis is all about support and resistance, right? Because if somebody is looking at the watch, if they don't use technical analysis, which I know some people don't, if they just look at a watch just like this and see Bitcoin and just look there at the price and the percentage and the change like on a phone, that does not really help that much unless you're trying to draw your own like manual chart. The reason we use charts is it gives us past price history that we can try to develop a forecast off of that. So how did I know that we're going to probably retest this? Is because the support level right here at 30,000, that's our first level of support. And then how do I know this was some kind of relative top? It's our resistance level. This is, technical analysis, the basics. But it's like sports. It's like basketball or football, baseball, any sport. The fundamentals is what we need to master instead of trying to just buy things. Right? So the fundamentals are, okay, if this is the support level down here and there's a middle heart line here, it wants to revert to that mean. But again, if we lose this Bitcoin support, it's bad. That's bad. It could test all the way down here. It could test all the way down here. It could test 618, 76, or 0.88 using these TA tools. There's not much support. Once we had this FOMO rally here in January 2021, there's only one real major level of support right around 18,000 or 20,000. So day traders, again, if you're just coming to the stream right now, day traders probably just can play every bounce that happens, algorithms, bots. Swing traders, though, we're looking for a more serious level of support. It's going to develop over maybe like a couple days or a couple weeks or months. Right? So, but as an investor I like Bitcoin, but I like to buy some when it's cheaper priced. And it is cheaper priced. Right? Because it was 60,000 and now it's 30,000. It's 50% off. But at a certain point, long time ago, Bitcoin was 3,000. It was 6,000. So if it's ever 10,000 Bitcoin, that might be more interesting than 60,000. So it's just, that's the hard part with trading and investing is the timing of that TA. I can't see your comment. The box is covering it. Yes, it's at support right now. But if you're asking me when is the downtrend, because right now, to answer your question, I went on tangent. Because if it's consolidating right now, Bitcoin. If we're honest about it, it's consolidating. We are not uptrending right now. We are downtrending right now in a consolidation range. So here is, we might see a day trading bounce. But is this going to be the bottom of the entire stock market for 3 years and then it's going to go up? That's a different question. We need to let the price prove it to be first. That's why, for me, if you're trying to figure this out, it's okay. There could be a day trading bounce here at the support level. Why? Because it is oversold. It's oversold on 4 time frames right now. 3 to 4 time frames. And the day traders, like I keep saying on the stream, are going to try to push this thing up. But there is a correlation with the stock market right now. So if it's a lower high, we could see a deep penetration down by the bots and the algos, because that's what they do, is they try to stop everybody out, take the position, and then they write it up and make their millions and billions of profit. Generally, that's what the algorithm is designed to do. So I'm just saying, it is at a support level. Watch for these piercings down of the wicks. That's why I might want to cascade the order down here. But in terms of somebody hodling at this point, it's a different question, right? Because if it's textbook Wyckoff theory, like I keep saying, the accumulation, the markup, the distribution, and where's the capitulation? That hasn't capitulated yet. It has not. This is just a pullback downtrend. I'm talking capitulation, everybody selling, panic selling like 2020 March. And then there is a trend change right here. See this? That's what I'm saying. If we study the charts, that's what I highly recommend. If somebody's trying to figure out the correlations and the patterns, I would recommend, even for myself, I need to study again March 2020 and then 2018. Because 2018, if you remember, there's the Bitcoin Cash Civil War, and that was that final capitulation before we bottomed out in early 2019. Then we had a whale buy this particular candle and triggered the rally. That could happen to our crypto. Doesn't have to be textbook perfect. But you'll notice that these are catalysts. Why did we top off here? Because President Trump back then made a tweet that Bitcoin's bad and useless, basically saying that, and then the market crashed. And then we rallied, then we had COVID, right? So if you study the history and try to figure out like what is this? Why did this happen? Why do we top out here? Why did we top out here before COVID? How did I know what's the bottom of COVID? How did I know to buy crypto before it breaks out above 12,000? Like those are all questions that if I study the charts enough, I will find the answer. So then I apply that to now. Is okay, we had the rally and we had the El Salvador news rally, and then we had with a little bit of FOMO here, and then almost went to 70,000. Break it didn't happen. Now we're in this double top phase, right? The worst case scenario of crypto is everything crashes down to nothing again, and that would be the best spot to buy. But if it's going to consolidate and people are trying to hold on, then these support levels on the way down, Fibonacci and etc., that's going to be the bounce. But in terms of the direction, sideways direction, that's not good. So in a bullish case, okay, great. If we hold the support and then we rally up and we break above 80,000, that would be very significant. Very significant. If we're just talking about one bounce though, for one person's day trade, it's like, that's you know, in the grand scheme of crypto, it's the grand scheme of Bitcoin life. I'm trying to focus on the big picture. All right, we went over today. I gave a lot of free knowledge, information, education, and even some strategies away today. So if you like today's stream, I would highly appreciate a donation or a follow or both. I'm streaming live on TradingView, YouTube, and Twitch, and I'm a free Discord where I give a weekly watch list, mostly about stocks and some stock indexes and crypto as well. I don't publish all of the ideas on TradingView. I just trade them, to be honest, or I learn from them and just study from it. But at the same time, is these live streams that I'm doing, it's not going to be, you know, I'm not going to live stream forever. So the thing is, you know, if you really like this, like, go ahead and join these other channels. And the group is free for now. It's open. Just have to verify to get in, and would highly appreciate that. So a donation would be highly appreciated here on TradingView, or donation on YouTube. And happy trading. Probably going to call it here. I went like 1.5 hours longer than usual, but it's because the market is so volatile right now. And I want to, again, caution people on crypto is, yes, we could get this, you know, day trading bounce and stuff like that. But at the same time is just, if I'm really objective about it, Wyckoff theory, if it's going to come true and we break the support down here, we could have a real bear market this time on crypto. So watch out for that. Hope you have happy trading. And again, social media links are in my TradingView profile if you want to check that out. We have a nice one, and I'll see you next. Actually, the stream schedule for next week will probably be next Monday. I can't stream this weekend, so it'll probably be next Monday or Tuesday. Usually I stream on weekends, but this weekend I can't. So Monday or Tuesday. Okay, so hope you have a good one, and thank you. See you next time. Bye-bye.